In today's video, we are going to analyze one of the possibly most promising communication stocks in the industry, ViacomCBS. We are going to do this by evaluating its long-term outlook, their most recent events like the still pretty recent flash crash, as well as their overall financial position. Last but not least, we are then going to finish off with the fair price you should pay per share of Viacom and a quick rating whether it's actually the right time to buy Viacom stock. This is Might As Well Invest, becoming smart money. Viacom, which was founded in 1986, is one of the big few leading US-based communications companies. Although I would call them a leader in the industry, it still has to be said that when compared to its competitors like Disney and AT&T, their market cap of $25.1 billion is rather tiny. However, it has to be said that this still is quite notable and does not come out of thin air either, as it can to some extent be attributed to their revenue of about $25.2 billion in their most recent fiscal year. To however get a better understanding of what may drive Viacom's revenue going forward, let's break that revenue down a little bit further. Generally speaking, Viacom divides their revenue into four segments, the biggest one being advertising with about $9.7 billion in revenue. Coming in the second place, we have affiliate revenues with about $9.1 billion, which are then followed by content licensing with about $5.9 billion. Last but not least, we then still have their theatrical and other segment, which contributes the missing $400 million. But enough with the brief introduction. Let's get to the interesting part for all of those who already are shareholders or want to become such, and that are the distributions to shareholders. Viacom currently returns capital to their shareholders through a dividend and to some extent stock buybacks. However, let's at first take a look at the dividend, which currently sits at about 96 cents, equaling a current yield of 2.29%. Pair this with a dividend growth of 2 years, plus a fairly decent 5-year growth rate of 9.86%, and you get what can be considered a decent and growing cash flow. Obviously, there was a break in that growth in 2017 to 2018, but I would look over that fact. When it comes to stock buybacks, these are a little bit harder to track. However, it can be said that they sat at a rather low 53 million in the most recent year. But let's take an actual look at the numbers in order to see how sustainable these distributions are and whether we might even be able to observe a higher distributions growth in the future. First of all, we are able to observe a free cash flow trend that is somewhat all over the board, but still shows some growth in the big picture. When inspecting the free cash flow, you should note that Viacom merged with CBS in 2019, therefore changing up some minor things. Most importantly, however, when put into contrast with the distributions, the overall trend looks rather sustainable. But let's also take a look at the balance sheet of Viacom to get a more detailed overview of their financial position. As per usual, let's start out with the year of 2016, in which Viacom's total assets sat at about $22.5 billion US dollars. These were made up by about $4.3 billion in equity, $11.9 billion in financial debt, and $6.3 billion in non-interest paying capital. But in order to be able to actually evaluate this even further later on, we want to calculate the net debt. This is obviously done using Viacom's debt and its cash position of about $379 million, with which we then get a net debt of about $11.5 billion. If we now compare this to the year of 2020, we can see a pretty strong increase in total assets to about $52.6 billion, which to a huge extent can be attributed to the remerger of Viacom and CBS. The previously mentioned total assets this time were however made up by about $16 billion in equity, $19.7 billion in financial debt, and $16.9 billion in non-interest paying capital. Let's however again calculate the net debt like we did for the year of 2016, this time however with a cash position of $2.9 billion. This time we get a net debt of $16.8 billion, which is a somewhat decent increase. But let's also find out how sustainable the debt of Viacom actually is and whether the debt has gotten more or less sustainable. This is done using the EBITDA, which after some basic calculations leaves us with a sustainability factor of 3.7 for the year of 2016 and 1.07 for the year of 2020. This indicates to us that the debt situation over at Viacom became way better to a point where it is in a quite comfortable state. Alright, so since we now have the financials covered, what we want to do is get the margin of safety, as this will help us with getting the fair price per share of Viacom. First of all, I want to highlight Viacom's recent launch of Paramount Plus, which is their most recent contribution to the whole streaming frenzy. Although this does leave Viacom a little bit financially strained, I have to say getting into streaming is a decent move that will most likely pay out in the long run. As of yet, they obviously don't have the big subscriber numbers to hold up against Disney or Netflix. However, if they should reach their subscriber target of 100 million by 2024, this would create a new and pretty significant revenue stream to count on. Therefore, I will be reducing my margin of safety by about 5%. However, it has to be said that a streaming service without content would be pretty much nothing. But let me assure you, Viacom does not lack content, as they not only have some of the most significant TV networks like Comedy Central, CBS, Nickelodeon, and MTV under their banner, but they are also the parent of Paramount Pictures, which produces absolutely incredible movies, like for example my favorite movie, The Godfather, or ones such as Shutter Island, which by many are quite beloved. In addition to that, you also have to note that Viacom isn't solely relying on their new streaming service, as they still got deals with the typical big viewership events, such as the NFL. And I'm quite sure that even if TV keeps on declining rather rapidly, things such as the NFL will still be a huge hit. Therefore, I will be reducing my margin of safety by another 10%. However, it's not all roses and sunshines either, as it has to be said that the main basis of Viacom's revenue comes from their TV and especially advertising segment. With the TV segment in general, however, on a rather decent decline, especially in the recent years, it is hard to say how long they will be able to still bank on this one. Sure, TV won't disappear from one day to another, and Viacom is moving a ton of its presence to the online world. However, I'm quite sure that the old presence and the huge advertising revenues generated from it will start to fade eventually. Therefore, I'm going to add 5% to my margin of safety. To now get the fair value of Viacom, we have to take a look at the historic dividend yield. For the past 10 years, this sat at an average of 1.38%. Thereby meaning you want to buy the stock if the yield is above that. To put it into numbers, with the current dividend of 96 cents, a fair price to pay would be $69.56, which would mean with the current share price of $39.75, you would be getting a 42.85% discount. If we now want to calculate the value I would pay for the stock, all we have to do is again get the average dividend yield of 1.38% and add my safety margin of 50%. This gives us our target yield of 1.58%, which leaves us with a price to buy the company at of $60.75. To conclude, I think Viacom has a decent long-term outlook, which like so many other companies will largely be driven by streaming. While I don't think they are the best communication stock currently out there, they in my opinion still provide enormous upside at their current price point, which basically can be attributed to a hedge fund blowing up and not really a significant change in the underlying company. Therefore, I would be rating Viacom an absolute buy simply due to its upside potential as a turnaround play.